It's Mr. Mark Selby again. How are you, sir?
Mr. Matthew Gordon, doing very, very excellent.
Yeah, and you were up at the cabin at the weekend taking out keys. Is it keys? Is that what you call it?
Oh, no, taking out, basically shutting down the water, taking the boat out of the water.
The boat.
And the docks.
The docks. That's what it is. I've got all the wrong terminology. Apologies.
Yep. Ice is a very powerful force, and so if you leave stuff in it and you're on the wrong side of the lake, you get everything gets crushed by the next spring. So
wow. Okay, maybe ice baby. Right. You just got to collaborate and listen. So I'm going to collaborate and listen with you now, and we're going to hear about the world of nickel. Since we spoke a couple of weeks ago, it's got a little bit boring.
It has actually, yeah. Sadly, in contrast to the face-ripping fireworks that we'd seen in the prior 2-week period, when we had last talked, when we saw prices move, 5%, hundreds of even $1,000 a ton in a day. We've traded in about a $500 a ton range over the last 2 weeks. So we really settled into $8.80, $9 a pound, which again, given the move we've had and sort of test above it, it makes sense that we are sort of consolidating at this point. But fundamentally, LME, inventories continue to drift lower, sort of continue to see, we had a little pickup for a couple of days, which pushed the prices down to the bottom of that range, but then the outflows resumed again. Again, in this kind of in-between period, again, we're here now where the ore shipments from Philippines are slowing down. In China right now, because of all the power cutbacks, it is having an impact on both supply and demand. So everyone is kind of in a wait and see mood to see is going to demand temporarily more impacted than supply or vice versa. I think, in nickel, it's going to be, more supply. Again, Jim Lennon and Macquarie did a great report just in terms of, looking at the cost pressures in the space and between coke prices going up and energy prices going up and ore prices going up, the marginal cost, for nickel pig iron producer is sitting around $19,000 a ton today. So, in terms of price support, over the near medium term, I'd say we're in pretty decent shape. And again, I think, the underlying momentum we've seen in EVs, things got a little ahead of themselves, but I think, we will see continued strong support. So, again, I think this is building a base, to a move higher, trying to take on the $10 a pound or $22,000 a ton level later next year.
Well, so that's set the market scene, and I think we're going to talk now about some of the companies and what they're up to. So lots of activity. It's kind of busy out there. I'm going to start off. I'm just going to throw some names at you. Give us an update on what they're up to. Sibayne Stillwater. They bought Santa Rita. That's a good sign. They seem very active, and they look like they're in the mood to acquire.
Yeah, no, for sure. The good news is, I think this is Sibayne's 4th or 5th deal in the metal space. They went from zero to being one of the largest PGM producers in a few years, and so it's nice to see a mining company that follows through on their conviction on an idea and is not afraid to be aggressive and get a bunch of deals done. So that was. That followed up on a few other deals in terms of buying some other nickel players as well as other lithium and other materials in the space. For us, in terms of Canada Nickel, with my Canada Nickel hat on here for a sec, it's a great read through. The toughest challenge in my past life getting Dumont forward was the next nearest project to Dumont and Crawford was Santa Rita, and it was a disaster. It was badly run, badly executed for many years. And so having that as kind of an example of this type of deposit was never great, but Appian brought in some great operators. They got the asset turned around. I think cash cost right now is less than $2 a pound, and the read through value in terms of, because the total deal was $1 billion, and they bought some copper asset as well, was somewhere north of 800 million US, for a project that has a 0.3%, nickel grade. And it has about 8 years of open pit, and then they're going to go underground. They're going to mine about 0.5 to 0.6% nickel underground. So again, for all those people out there who think you can't mine nickel profitably for less than 1%. There's some pretty smart money out there that thinks you're wrong. So again, it's great read through for us, great read through for the other large lower grade deposits. And again, it's nice to see some more activity in the space.
Oh yeah, fantastic. I mean, Sibayne Stillwater, they're on an acquisition, trail at the moment. They're fully committed. I was going to make that point. This is point 3, so therefore this should provide any doubters, hopefully, with some food for thought. Here's something that you may disagree with. Chalice Gold have announced the largest nickel sulphide discovery in the world since 2000.
Yeah, I'm not quite sure. I think it's the largest discovery in Australia since 2000. So either they think Australia is the world, or they haven't quite done the maths right. So
the Nickel World Series in Australia. Yep,
exactly. That great American view of the biggest in the world.
Absolutely,
just one country.
Come on, Chalice Gold.
Chalice Gold. So. It's excellent. So, this is a new discovery. And as I say many times, new discoveries that have any nickel in them are pretty rare. Now, this started out as more of a nickel with some PGEs, but it was clear then it was really the PGEs driving the bus. And again, 300 million tons containing, 10 million ounces of PGEs, about 500,000 tons of nickel, and then some copper and cobalt that went along with it. I think one point with this, there's another resource that came out, the overall resource, in terms of nickel grade, the nickel grade's less than 0.2%. And the PGM grades, in total are about 1 gram per ton. So, it was interesting. It was the resultant resource was a little lower grade than I thought it was going to be. But this one and the next one we'll talk about. I've made the point many times that you get some pretty spectacular intervals, but it's really tough to get to oftentimes to turn that spectacular interval into a resource grade that looks anything close to what that interval looks like. And I think this is another example of they had multi-gram per ton palladium, multi% nickel hits. But when you start wrapping actual resource blocks around them, it's tough to get that grade up. They've got a smaller high grade core, and that's part of that resource for sure. But that it sort of really drives that home. So again, they have a massive amount of exploration potential. So hopefully this gets a lot larger, and it will be a mine. From an investment perspective, it's up, I think, north of $3 billion at this point. So I would say it's pretty fully valued at this point. But again, it'll be nice to see that progressing. The other one that put a resource out was Poseidon. Again, is a target that we've highlighted before. Again, great management with Peter Harold. Had some amazing. Again, this is one of the highest grade nickel mines in the world. And again, one of the things I was trying to highlight when they were drilling it is, if someone is drilling for a resource and they really think they have a resource, there's a specific way they drill it. And these guys were very systematic in terms of how they were doing that drilling, and got, again, some very good, good individual assay results. But the tricky part is when you have to start to put a piece of rock around that you can actually mine, those grades often come down, and don't turn out to be nearly as big as you think. So again, all of the really good hits that Poseidon has had over the past, year drilling out their Golden Swan discovery, that Golden Swan resource in all categories turned out to be 160,000 tons at 4% nickel, that contained 6,000 tons of nickel. So, and that'll get bigger when they get in there and start mining it. It's not closed off in any direction, but again, just a cautionary tale to when you see a couple juniors who put out one drill hole with 4 meters at 4%. If it's brand new discovery, great. But, if they're poking around some old mines that maybe had a little bit of that, one drill hole does not a mine make, and 50 drill holes with decent intervals, sometimes don't turn out to be a big number. So again, I just want to use both of these examples of, again, these are successful. These are what real resources look like. But the sort of taking a line from a drill hole and inferring what that looks like in a resource can be pretty dangerous. So just again, a couple of good examples of that.
Yeah, and you need to be a brave investor to kind of fall for that, I think. Well, maybe brave's the wrong word. Can I just come back to Chalice slightly, if you don't mind for a second? Because it's big. I should say they've got to backfill a lot of that valuation. I suspect they've got to spend a lot of money to do that as well. At point 2, and they've got a small high grade core there. It's going to be interesting to see the way that they come at this, because we talked in the past about the difference. There's a fine line between high grading and focusing on the high grade core initially, just to kind of get the cash flowing and then systematically going about the rest of the ore body. But these guys, do you think that they're, given this as a maiden resource, do you think there's a lot more drilling to come, which is going to be targeted towards trying to find higher grade? Now they've kind of got this base from which to work, or how do you imagine they're going to come at this?
I think it'll be a dual track. They've got another, they highlight very much. They've only drilled off a few kilometers of what's a 25-kilometer trend. So I think it'll probably be a twofold strategy. One of, let's poke around at some of those other targets to see if we can pick up any other higher grade material. And then number 2, is continue to build out and expand that resource, because where they'll want to end up is you want enough resource so that you can hit it with the biggest scale possible to bring your costs down, and have the sweetener of that higher grade material to really make the math work. Because what you don't want to, and I think they're past this, but what happens sometimes is you kind of get in this in between spot where you don't have enough scale to really get a low enough cost operation, but you don't have high enough grade to really have a smaller scale, high grade operation that's going to generate enough cash to pay for all the infrastructure you need to get the mine going. I think they're well past that, but so that's why I think they'll sort of keep going down this dual track. They're hugely well funded, and at $3 billion, they'll be able to raise capital, any and all the capital they need to get it. And I think their valuation reflects another point I made. Generally in terms of the nickel PGE space, there's very, very few new discoveries, and so when you get, the market recognizes you for that, you get to trade at a premium valuation pretty quickly. Okay, so we are following these guys with interest. And talking of discoveries, Estrella. Yeah, so we've it's good to see we've kind of got some news flow flowing once again. So Estrella is around the former Carboy mine. They're poking around, has some decent intervals. They've been stepping out as well from the initial discovery. So we'll see how that goes. Again, that's the thing just to keep an eye on in terms of what the shape and scale of what they've got. But if they can start to poke around and add some scale to it, then it'll be interesting. And then another one put some news out is a group that we hadn't. I'm not sure we've talked about.
No, we haven't. Nickel Creek Platinum.
Nickel Creek Platinum. So this is a past producing Wellgreen mine. It's up in the Yukon, operated for a few years, then the late 60s, early 70s. They have a large lower grade resource, sort of in the same bucket as Crawford and Giga and some of the others. They're in the same sort of set of structures where Giga and FPX are in that part in Western Canada. The challenge with this deposit is you can have too much sulfur. There's in these deposits, and this is what attracted me initially to Crawford, is there's kind of the right amount of sulfur that gives you the really good grade mineralization and allows you to make a high grade concentrate. There are some deposits like the Duluth complex in Minnesota. These deposits all suffer it, and Nickel Creek suffered from it. Is you have so much iron sulphide that you can't make. You can end up making like an 8 to 10% nickel concentrate, and if you're in a more remote location, it's pretty expensive to ship it out. So the lower grade deposit, really got hit when they put a PEA out a couple of years ago. So that's still there. That optionality is there. If you're a massive nickel bull that thinks nickel's going to be $15 a pound for a decade, then their low grade deposit becomes a great call option. But what they've done, there's an ex-Vale guy, Stuart Harshaw, who I actually went to school with. He's running the company now, and they've decided to focus on some of the smaller high grade, because there are around the edges of these low grades, there's often some decent high grade nickel associated with it. And again, drilling program, half a dozen intervals of 3-4 meters shallow, that are a couple percent nickel, percent copper. And so I think those are very interesting things, and we'll see what they're able to come up with around that. So again, it's sort of a good start. Market cap's pretty low, so we'll see where they go from there.
Interesting one. Yeah. I just wanted to say, there's a company. I actually texted you about this, didn't I? And I was going to say, because I was looking at this company. It's hasn't got a big market cap. Share price has not done too much over the past 12 months. But I remember you saying it's a good management team, and that's SPC Nickel. What's your take on them?
Yeah, no, I think that they've been crushed by in Canada, and we've talked on this before. The assay labs are backlogged like crazy, and so you visually can't look at core and say what the PGM grades and stuff are. So in a deposit where that's a huge amount of the value of what you're trying to unlock, that it just makes it very, very difficult to conduct exploration programs. So I think for a lot of companies, that's just choked off the exploration news flow. And then if you've raised any flow through money earlier in the year, if they haven't sold your stock already, they're going to sell it in this time period, which puts additional pressure on the stock. So I think that's kind of what you're seeing. Again, this is a good chunk of the guys in Falconbridge who was in the Sudbury Basin. Were very, very good discoverers. They're backed by Dundee, who their private financing group, who were part of the group that helped finance FNX, which turned into a big discovery. So again, they're shooting for some higher grade, higher risk type drilling, but they're sitting between Vale's new mine in Sudbury and then the Victoria discovery that FNX made about 12 years ago, which if it wasn't owned by a Polish copper company, would be in production today. So we'll see how they go. I think, again, in terms of punts on nickel, option calls, this and taking a chance on a good exploration team, I think, these guys at these levels, it's worth putting a few pennies in it. Again, could go to zero, could go quite lower if they continue not to find anything, but, we'll see how they go.
Okay. And here's a company we're about to talk about. He don't put out much news, and it's fairly bland when it does come out. And let's share it. I mean, what's your take on their strategy?
Yeah, so Sherritt had a senior management shakeup. There's a CEO in there for quite a while, and to be honest, there's a lot of investors who are really frustrated that they really didn't do much for a while. And part of it was they were pretty hamstrung. Their joint venture partners is the Cuban government, and Sherritt also has a bunch of oil and gas and other acid power generation in Cuba. And the tricky part is when your joint venture partner doesn't send the money to your company, it makes it a little challenging to run your business. So they have had those kind of issues, and now Cuba has been paying regularly. But it's good to see. MOA is one of the few HPAL projects that's worked. It was built 50, 60 years ago. Sherritt bought it for pennies in the early 90s and got it fully operating, and then had scaled it up a few times. So it's nice to see Sherritt back on the growth track again. And it's important for the Cuban economy. Sugar and nickel are the two biggest exports of the country. So, it's good to see them actually looking to start to grow that business once again.
Okay. Again, it's one we've not really paid much attention to. I kind of thought they'd lost their way a bit, but let's track them with some interest.
I think they're on track, and they own one of the few nickel cobalt refineries that's capable of producing high purity metal. I haven't seen where their market valuation is right now, but that asset alone is probably worth their market cap. So
it might be worth doing a session at some point, because we've spoken recently about some of the companies, some of the great companies, the Incos, etc. of this world, who lost their way at various points, or didn't take the plunge and look to innovate. And as I always say to people, empires rise and fall, and if you're not on the front foot, you're going to be in trouble. But let's see if Sherritt can pull this one off. Okay, FPX Nickel. We have not spoken to them for over a year, but they've been busily getting on with the business of doing business. So, what's your take on how they're progressing?
Well, that's what's been interesting. Again, over the past 12 to 18 months, in terms of the focus on carbon, low carbon, has been good to see. Again, from the beginning at Canada Nickel, we've been very focused on zero carbon. We have an announcement out today as well.
I saw.
FPX, is FPX has an aurorite deposit in BC. And again, this is one of the large scale big projects that are out there. Aurorite, the nice thing with that is you can process it in a way that gets to a saleable product, effectively, to an end consumer out of the mill with having to bypass the processing, so that adds a lot of value. And again, it's hosted in the same rock that Crawford, Dumont, and some of the others have done. So they've been working doing a lot of work for the past 4 or 5 years on carbon sequestration. So it was good to see. What they're looking to do is basically take the off gases from what you would see out of a normal diesel generator, which can contain a higher amount of CO2, and flow that through their tailings to see how much pickup they got. And again, it happened a lot quicker, and they got a lot more CO2 pickup than just letting the tailings sit there. So, we've got a bunch of innovation coming in the pipe. It's nice to see them having a bunch of innovation. So, again, I think, this is an area where, we're just a few years in terms of what's there, but there's a huge opportunity there, given where carbon prices are headed.
Yeah, absolutely. Again, we must get them back on. You always keep reminding me we need all of the above, and it's always interesting the way people the different strategies that are being employed out there. Now, you just made reference to a company dear to our hearts on this platform of ours, Canada Nickel Company. Saw the press release this morning. That's not too bad, is it?
Yeah, no, I mean, again, it's early stages, it's lab scale, but fundamentally, we need our tailings to soak up 4.5 kilos of CO2 per ton of tailings to take us to net zero. And the top layer in the columns we tested, we're able to get up to 17 kilos. Now, there's no guarantee that we be able to achieve that number as of we know right now, but it gives us the target to go for, to say, look at if we can find a way to get enough CO2 to be exposed to the tailings long enough, that's the amount of carbon, that we can capture. And what that means basically, every kilo of carbon beyond that, of CO2 that we can capture, that's nearly 900,000 tons of carbon credits, over the life of mine. And if we can get 10 kilos more, that's 9 million tons worth of carbon credits. So
how do you play that though? How do you play that? Because you don't know, because this is a multi-generational, multi-decade project you're trying to build here and beyond, right? So you don't know what it looks like further down the line. You want to be able to say you want to be able to talk this whole carbon sequestration and net zero carbon, all those wonderful phrases that people want to hear now. Do you sell that? Do you sell for carbon credits? If so, how much money do you get? Or do you keep it in the back pocket for yourself in case something goes wrong further down the line?
Yeah, no, I think in any streaming deal, if you're going to get to that point, it's never good to stream 100% of what's there, just because, again, you're never, and again, mining is always full of surprises. So, if you can stream 25 or 50% of what might be available, then that allows you, particularly in something that's highly valued and probably you could sell with a relatively low discount rate for a 40-year project. Then that's a kind of stream that you would do. But again, beyond 25 to 50%, it would be silly, given what we think is going to unfold in carbon over the next 10 to 20 years, to give up that much upside too soon. But it's good, having the ability to get to zero, sort of another step closer to prove we can get to zero, also opens up the opportunity where, as a zero carbon producer, we believe, and Macquarie did some great work over at LME Week to show, what the premium per ton of the various metals might look like in 5 years. If you're a low carbon producer versus, your average typical producer in the space. And for nickel, I think it was over $2,000 a ton. So, even if we got 25% of that's a tremendous outcome. So
okay, so again, I just want to stick with it just for a little bit, if you don't mind. Is because you're possibly sort of leaping forward a bit. You introduced the phrase streaming in association with this. Obviously, that's a means of keeping costs down now, but as you said, you don't necessarily want to give away everything up front because you don't know where this thing's going. Further down the line, there may be more money to be had. So that's obviously part of your thinking with regards to how you finance things going forward, the streaming on the carbon credits.
Yeah,
right.
Yeah, for sure. And we'll look at our PGMs as well. too. So
okay, understood. Okay, let's. There's a company which is, I think, is coming on soon. We've had a couple of attempts, failed technical attempts on them, which is Queensland Pacific Metals. Now they're talking net carbon negative language too.
It was an interesting release. They're looking to use. They're in Queensland, which is obviously a massive coal producer, and when you produce coal, there's a bunch of methane that comes along with it, and so what they're looking to is take methane that would otherwise be vented or flared by these projects and use that as a fuel for their operation to help because methane's an even worse greenhouse gas than CO2. So I thought it was kind of a novel approach, and it's again the key here is it's good to see people spending the time and energy to trying to figure out ways to make their business lower carbon, because that's ultimately what we need to do as an industry.
Well, we as an industry do, and I know you're making calls to the industry to innovate, get on the front foot, bring some of these timelines forward, and be serious about it. So I guess Queensland Pacific Metals to be applauded. Are you seeing any other names out there which kind of getting on the front foot like you guys are?
In the nickels, I mean, any of the ultramafic deposits like us, so there's FPX and Giga, are spending the time and doing the research to take advantage of the fact, that we're going to be grinding up this rock that spontaneously absorbs CO2. So, we should try and find ways to maximize its capacity to do it. So, they've been the primary one, actually. I shouldn't say, and BHP with Mount Keith operation, which is again the grandparent of these deposits. They already account for a certain number of carbon credits from the tailings there each year. They're looking for ways to further optimize and enhance the amount. They're basically just taking the tailings as they were deposited and measuring the carbon pickup from them. They're looking for ways to try and optimize to see how many more carbon credits they can generate from those tailings.
Yeah. Okay. And I guess there's lots of other ways that mining companies need to come at this, and we'll discuss those in the future. Just final one, which is company's been on a few times, and it just shows you the advantage of getting the right strategic partner onto the board, also committing capital and know-how, but more importantly for these guys, access to market, and that's Blackstone Minerals. Just raised some money recently.
Yeah, they pulled together $60 million, and again, the key there is they were early adopters of a model that I think you'll see in terms of processing at other bigger projects around the world. Is nickel concentrate comes in the door. They've partnered with a battery precursor maker, and out the back end of that facility will come a battery precursor plant. Again, in all my past life discussions and current life discussions, that the industry sees that sort of end-to-end process as the lowest cost way to get the nickel units into the battery market. And again, the auto industry is always very focused on taking costs out of the entire value chain. So it's been great to see them, raise the capital, continue to advance that, with EcoPro, and then with Trafigura involved as well. So, I hope it's a huge success, because it is going to be super helpful to the nickel miners.
Okay, well, Mark, look, we're going to wrap it up there, because you've got to jump on a plane in about an hour and 15 minutes. So, look, we'll catch you next week in London.
In London, in person.
Wow.
Looking forward to it.
Feels funny even to say it. Mark, look forward to it, mate. We'll see you next week, okay?
See you next week, sir. Take care.